Federal Reserve is partly blaming itself for the collapse of Silicon Valley Bank. In a newly released Fed report, the organization sharply criticized Silicon Valley Bank's leadership, calling it, quote, a textbook case of mismanagement. However, the Fed also blamed itself for its lack of oversight and inability to fix the issues that led up to the collapse. The report comes as another bank, First Republic, teeters on the brink of a potential breakdown. So joining us now for an in-depth look on this report is business and finance journalist Krisitin Myers. Kristen, thank you for being with us. So regulators are taking some of the blame here, saying they didn't act strongly enough to prevent Silicon from collapsing. They say the warning signs were there, but they didn't do enough. So the new report is calling for stronger oversight rules for mid-sized banks. But what does that mean for customers, for the people who bank at these institutions?
So, Nichole, when it comes to a lot of the regulatory oversight, this could be partially some good news coming to any customers, mainly because they're not going to have to fear a collapse of their own bank and perhaps even losing all of their funds in some of their bank accounts. The downside, perhaps, to some of these regulations, and we don't have them yet, so it does remain an open question, but some of the downside could really be that some of those stringent requirements that are going to be placed on these more mid-sized or regional and smaller sized banks could actually start to shut out what might be viewed as riskier borrowers from actually accessing financial services. Again, we don't yet know what regulations are really going to be coming down the line for some of these banks. We're going to have to see what they are. But I think most customers should feel fairly secure going forward with some of these regulations, that their money is going to be safer going forward. But again, there is the potential that some of these folks could really be, again, shut out from access from perhaps getting loans or funds from banks.
And Kristen, as you said and reiterated there, we certainly don't know for sure, what changes, what will be recommended, but what kind of implications, as we speculate, talking about mid-sized banks, what about the bigger banks? Could more, what type of impact would more oversight potentially have on those larger institutions, and more importantly, on the people who frequent and utilize these larger institutions?
Right. And even the Federal Reserve actually said in its report that rolling back some of those protections that actually existed in Dodd-Frank back in 2018 actually contributed partially to what we saw at Silicon Valley Bank, but also to what we're seeing right now at First Republic Bank. Now, those rollbacks and restrictions actually didn't apply to some of those banks like that we think of, the Chases and the Bank of Americas, for example, and they are often referred to as too big to fail, mainly because a collapse at one of those banks, and everyone can see them kind of rolling across the screen right now, would really cause calamity across the financial system. And so they still have these stringent regulations in place. However, if they do start to apply greater regulations, it's really going to hit those banks like First Republic that are far smaller and that have also seen a lot of the number of their deposits actually not insured by the FDIC. That is not necessarily the case at those too big to fail banks. Right now, the really big question for some of those larger banks is if the government is actually going to somehow force or start to broker deals between some of those bigger banks and a bank like First Republic and essentially force them into a bailout situation.
And last question for you, Kristen, just really quickly. Should Americans feel like their money is safe in the bank, in a bank, whether it's big or small?
Yeah, I would not at all recommend, if you're watching this and you say, I need to go to my bank, pull my money out and hide it under my mattress, do not do that. Absolutely do not. It is a terrible idea. And if you have $250,000 or less in any individual account, your money is safe. It is insured by the U.S. government. So even if your bank were to fail, if you have less than 250 grand in your account, you are going to get that money back. So this is, again, not going to be a problem for most Americans. Please do not go out and run and take all your money out of the bank.
And if you've already done it, it's under your mattress, put it back in the bank. All right.
Please put it back in.
Kristen, thank you so much. Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.